In March of 2010, the Jamaica Deposit Insurance Corporation, JDIC, staged the first Caribbean Bank Insolvency Conference at the Rose Hall Resort and Spa in Montego Bay. Over 20 experts from countries across the Caribbean, Canada, the United States and United Kingdom spoke on issues relevant to the global financial crisis, international initiatives towards best practices and resolutions for bank insolvency. Chief Executive Officer of the JDIC, Antoinette McKain, spoke to the timeliness of the conference in light of the global economic meltdown.
The recent global financial crisis of 2007 and 2009 and its impact on financial markets and economic systems, including right here in the Caribbean, has reminded us of the integrated nature of structures that are directly concerned with financial system regulation and those that are indirectly concerned with banking system crises that arise. It is with this in mind and that JDIC, in association with the Caribbean Regional Technical Assistance Center, CARTAC, has specially targeted you for presentation of this conference.
The Honourable Audley Shaw has held the portfolio for Finance and Public Service since 2007. Minister Shaw holds a Masters of Arts degree in Marketing, Finance and Public Relations and a Bachelor of Arts degree in Journalism. He has served as the Member of Parliament for North East Manchester for the past 17 years. He is a recipient of the Donald R. Grubb Northern Illinois University Distinguished Alumni Award.
I want to congratulate the organizers in the professional way that this whole event has been put together. And to thank all of you for coming out, because clearly this is a subject that is of significant moment. It is important, the whole question of bank insolvency in the region and our state of readiness, so to speak, law and best practice, as you put it. The issue, I think, is one of adequacy of preparation, to be adequately prepared. In Jamaica's own experience, and I think by the end of this conference, I can predict that there will be consensus emerging that there is inadequacy in terms of the insolvency laws that prevail in the region. I can certainly openly admit that it is inadequate in Jamaica. In fact, we don't have an insolvency law in Jamaica. We still operate under the Companies Act, and despite the revision of the Companies Act some years ago, that particular section of winding up of financial institutions, including banks, that basically has not even itself seen major revision. We still operate under a clause that is, as I think was promulgated in 1948. So that in Jamaica's case, there is a case to be made for promulgating a modern insolvency law that places us, and perhaps even uniquely should place the banks in a position where they are able to operate within a law that has clearly defined parameters of winding up of enterprises that are deemed to be insolvent. Despite the global implosion, we had an implosion of our own that was much more devastating in impact on the Jamaican economy than what happened within the past year or year and a half. In the middle of the 1990s, we had the collapse of the financial sector, with over 40 institutions going under. Over 40 financial institutions going under. And they went under because of the burden of an interest rate policy at the time that was absolutely horrendous. It was, during the 1990s, average commercial bank lending rates in Jamaica was 53% over a 10-year period. Let me repeat that. Average commercial bank lending rates in Jamaica for 10 years during the 1990s was 53%. That means that for it to average 53%, you understand where it went that much higher on the continuum of interest rates. I don't know, and maybe somebody can help me to carry out a study, if there's any other country in the world that has had a sustained period of such high commercial bank lending rates. We have decided that the Bank of Jamaica must play a more central role in ensuring financial system stability. The Bank of Jamaica laws will be amended in accordance with that commitment. We have also indicated that the Financial Services Commission must play a much more detailed and intensive role in monitoring institutions of all types. The licensing process has to be re-examined. There are too many loopholes under which too many of these illicit enterprises, alternative investment schemes, etc., were able to operate, and there was an apparent inadequacy of adequate legislation to lock them down decisively and early. We must put in place systems that are very purposeful, that are direct, that are hard-hitting. We must be able to deal with it so that in the same way Mr. Madoff with a lot of money in the States, they also sent him to prison quite quickly. We must have that capacity here in Jamaica as well. We haven't had one failed institution since the Lehman Brothers situation. In fact, it was one of the good things that came out of the financial sector collapse, that we in fact made sure that there were revisions to the Bank of Jamaica Act, and there was the establishment of the Financial Services Commission, there was the establishment of the Jamaica Deposit Insurance Corporation as well. All of these were outgrowths of the collapse of the 1990s. And I want to say to all of you that Jamaica is ready. We have prepared ourselves very carefully. I believe that the message has gotten out to all of our partners that it is time for production, it is time for productivity, it is time to create wealth.
Brian Wynter took up the mantle as Governor of the Bank of Jamaica in November 2009. However, since 1988, the veteran economist has held senior positions at several of Jamaica's top financial institutions. This includes the post of Deputy Governor of the Bank of Jamaica in 1995. Prior to returning home to assume duties as head of Jamaica's central bank, he served as Financial Sector Advisor at the Caribbean Regional Technical Assistance Center, CARTAC, in Barbados.
The subject of bank insolvency is, to a regulator, perhaps somewhat similar to what the subject of pathology is to a family doctor. By examining in principle and in practical detail the nature and the progression of the end of the life of an institution, by doing so, the regulator is helped in her understanding of how to maintain a healthy institution. The recent global crisis reminded us that banks matter enormously to our economies. But it is well recognized that the purpose of financial sector regulation is not to prevent financial institution failures, much as that is desirable, but the purpose or the primary aim is better seen as providing the framework for the efficient functioning of financial markets, with adequate banking and other financial services being provided, and the protection of depositors and overall financial system stability. It is therefore of utmost importance that we continually seek to ensure that our oversight frameworks allow for the development of strong and resilient financial systems with necessary provisions for the orderly exit of intermediaries whenever this becomes necessary with the minimum of disruption to the economy and, of course, to the depositors and clients of the financial service providers. Supervision in Jamaica and regulation has been substantially strengthened since the financial sector turmoil that the country experienced in the 1990s. The establishment of the Jamaica Deposit Insurance Corporation and the creation of the Financial Services Commission were two of the more striking aspects of the effort to strengthen the regulatory and supervisory framework of the financial sector. And the process of strengthening continues. While these developments that I've just mentioned make for a more tightly regulated financial sector and place the authorities in a better stead to address weaknesses that may emerge, are these changes sufficient to deal with the potential impact of future crises and problems? Well, I think in at least one respect, we can say that the answer is no. A factor that was not a significant feature of the earlier turmoil in Jamaica was cross-border reach. The Caribbean single market and the prospect of the eventual Caribbean single economy, when it comes, involves and will involve the removal of certain legal, economic, and trade barriers. Against this background, the central banks of CARICOM, and they are the bank regulators in the region, deposit-taking regulators, they have initiated the development of a regional crisis management plan designed as a regional response to crisis situations of banking enterprises operating in more than one jurisdiction in the region. The plan is intended to address crises that involve illiquidity situations or the ensuing insolvency of at least one member of a banking group. It's also proposed that the plan will address principles underlying preparedness, crisis preparedness during normal times. Other principles such as the way in which we will conduct systemic risk assessments. How will we handle crisis identification? When is there a crisis? How and when would we invoke the procedures that we have decided that should be followed? And very importantly, the adoption of region-wide communication strategies. With all the safety nets, deposit insurance corporations, with all the best regulations, crises will happen, and this is about being prepared to deal with those crises in a way that minimizes the disruption and risk. And indeed, in some cases, if you act quickly enough, what would later be seen as a major crisis may not even be perceived as a crisis to the ordinary businesses that are operating and individuals operating in our countries. The plan is to be adopted through a memorandum of understanding amongst the participating central banks. However, a number of challenges to making these arrangements a reality have been identified and remain unaddressed. How should the costs of any remedial action to stabilize the financial sectors in the participating countries be shared in cases where there is or there may be spillover contagion between jurisdictions? How will we treat the variations in the different legislative and supervisory arrangements in place in the member jurisdictions that may impact on the ability of the jurisdictions to fully participate in the regional plan? Resolving the issues that I have identified would therefore seem to be an urgent priority for regulators and policymakers across the region.
In our next episode, we'll feature the Governor of the Central Bank of Barbados, Dr. Delisle Worrell, and Deputy General Counsel of the IMF, Ross Lecow.